Welcome to Market Movers, where we identify market-moving headlines and discuss ways to either hedge risk or create exposure in affected assets. We have Scott Martin.
Hey, Jim.
Scott, big week. We have the headlines of Fed talking about curve control, or people thinking they're going to talk about it. The jobs number that was 10 million better than expected last week, and resurgence in tech stocks, bringing into question the big sector rotation thing again. What's the biggest headline?
It's really all three, and depending on the push or pull in the market, and depending on the day, it mixes in those different headlines, depending on what the market's kind of focusing on. For me, recently, it has been the Fed talk with respect to more comments out of Fed Chairman Jerome Powell, but also the jobs numbers, too. I mean, those were absolute blowout numbers last Friday, and it also portends potentially better than expected economic numbers throughout the rest of the month.
Okay, NASDAQ versus Russell. Is that recovery, domestic recovery versus Fed liquidity? How are you reading it? Today the NASDAQ's outperforming.
Yes, Jim, it's been a really interesting one to watch. As some days we've had a really vast spread between, say, just the Russell and the NASDAQ. We're not just talking a couple basis points here and there. We're talking about several hundred. So in my opinion, Jim, when you have that volatility kicking in, it's liquidity driven. But as we've talked about on Market Movers many recent weeks, I still watch the NASDAQ very closely because of the strength that the companies have fundamentally within that index as far as which index I like better going forward.
Okay, to express sector rotation trades, the CME has the Dow, S&P, Russell, and NASDAQ, minis, micros, and liquid options products. On to metals. The dollar touched 96. It seemed to be weak in the last couple of weeks. Is the strength in the gold and silver trade going to continue, and is it a response to the weak dollar?
Yes, I believe it is, Jim, and it's about time that the dollar got a little bit weaker here, given all the liquidity that's out there that the Fed is providing, given the money printing that we're seeing out of the Treasury Department. So it seems logical that the dollar's weakness was going to occur. Now, how that affects gold and silver going forward is, in my opinion, going to be positive. And so we've seen a little bit of pullback in the metals over the last several days. I believe that is going to reverse and start pushing those prices higher as well.
Agreed too. I'm long silver as a response to that as well. CME offers the regular gold and silver contract, the micros, and also liquid options as well. On to what I think is the biggest story is the Fed and the talk of potential yield curve control. We saw yields go from like 0.96 to 0.79 in about a day and a half. How do you think this push-pull is going to resolve itself?
Well, Jim, I mean, we're starting to see it. Steepening of the yield curve, my friend. I mean, goodness, we're starting to see that short end, like you mentioned, being really under control, but the long end maybe taking on a life of its own. So I believe the Fed's goal here is to steepen the curve a little bit more, probably help out the banks and the financials. And so far, it seems to be reacting well in the markets.
So I'm curious too, because I actually think they don't want long end rates to get too high. But we'll see how that resolves itself. The CME offers the 10-year contract, was one of the marquee products and most liquid, also extremely liquid options as well. Thank you for joining us on Market Movers, where we are helping to make you a better trader.